markets forward with Nishit Shah joining us. He's heading the PMS at Phillip Capital. Nishit, afternoon. Thank you so much for your time. I was just looking at your strategy. BFSI is one space you are very bullish on. And beyond just the banks, which everybody is bullish on, non-banks from the NBFC space, some names which appear to be in your portfolio are the ones like which are doing very well. In fact, fresh lifetime highs for Poonawalla Fin Corp. Talk to us about the business model which is evolving there and why do you like it?
Thanks, Ajay, for having me here. Okay, so of course, I think the market is in a lot of contrast since the last time when we spoke in first week of March. Of course, one sector that you spoke about, BFSI, has done quite well in this period. And of course, I would not like to get into particular details about our company, but yeah, entire BFSI segment has done well, especially NBFCs has done well. So the idea behind for us in investing into the Poonawalla Fin Corp was a change in management. The entire balance sheet was cleaned up, new kind of management had come in place and everything, and that is what we had picked up into that stock. And of course, the stock has done quite well. Okay, of course, having said that, the entire BFSI space has played well in last 4 to 5 months.
See, I don't want to. What I was looking for, basically, not a reaction in the stock, but the evolving business model for any, kind of a NBFC which is digital backed and are looking at very high numbers, the 30-40% kind of growth which this management has guided for, but few others are also kind of chasing, and the environment is providing that opportunity. Do you see a runway of growth next 2-3 years in this environment where rates may either remain flat or may start edging lower and the credit demand is good?
Yeah, absolutely. So see, we particularly feel that over next 2 to 3 years, we'll see a good amount of credit growth across the entire BFI segment, and especially amongst NBFCs who want to go on back of digital initiatives. I think that is a very good space to be in, kind of a thing. See, the main thing that is playing out for the economy is doing quite well. Yeah, and that is where we'll see, and the entire BFSI space is poised well, kind of a thing. Yeah, wherein a lot of growth would be there. Of course, we had come out from the huge NPA cycle, so over next 3 to 4 years, I feel that this particular sector would be doing quite well.
Nishit, from the other space I want to talk to you about is consumer durables. Some unique consumer durable companies are taking shape, especially water hygiene continues to remain a big issue. But at the same time, piped water initiative by the government, even higher electricity is giving birth to a new consumer durable, which up till now only the elite had. The electricity-backed, power-backed water hygiene devices. And Mr. Pota has gone to one recently. Is that also a category which you think can become very big? Up till now, it is very small. It's nowhere matches a television set or even a washing machine or a fridge. But do you think this category can become very big next few years?
Yeah, absolutely. See, till now, what has been the government initiative? The first initiative was to get power to each home. The second initiative was to get water to each home. Now, once we have these two set of things in place, yeah, people will seek for clean water, kind of thing. And that is why I think this space is going to grow very well. And water as such is a very big shortage in India. Clean water especially, yeah, and that is where I feel that this particular sector is poised for great growth in next 3 years, 5 years, 10 years. I absolutely do not have any issues as far as the growth factor is concerned. Of course, again, the company that you have been spoke about, we had picked up this company again because of a special situation kind of playing out there. A new management had come in. For us, it was quite clear during the previous management, this company used to make hardly any margins despite being the market leader, and the second best player used to make very huge margins. Yeah, and of course, with Mr. Pota joining in, I think that is again it was a cherry on top of for this particular company.
You also like the mid-tier capital goods space, but the only challenge out there is they are no longer cheap. Are you also grappling with this challenge? Or anything else which you like in the mid?
Has picked up after a very long period of time. Yeah, and we are only at the start of that cycle. Whenever capex cycle picks up, you generally see that over next 7 to 8 years, this entire cycle does well. Of course, herein, I think valuations have gone ahead a little bit. But again, as I told you, this entire theme is going to play out for next 7-8 years. Yeah. And if we are in the right set of stocks, I think money would be surely be made, kind of a thing. So valuation is a concern, but I think with growth coming in the entire capex cycle, I would in fact play it in the old economy sector, kind of a thing. Yeah. Wherein if the entire old economy sector does well, I think a lot of manufacturing, capital goods, infrastructure companies would continue to do well.
Are you picking up something in bombed out chemical space which nobody wants to touch? Or you think
As
it's still away from the real bottom?
Sure. So we have stayed away from specialty chemicals since a long period of time. Yeah. We have started looking at some of the names, but as of now, we still feel that there's still some pain left for this particular sector. China has come in a very big way in the markets, and they have been dumping a lot of goods at a very, very low price. And of course, valuation wise, also specialty chemical companies had enjoyed good valuations till 6 months back. Though, of course, there are few good names that are emerging, but as of now, we have stayed away from this particular sector. So if you go to see Ajaya in this particular market, there are basically three sectors which there is some value emerging. One is IT, yeah, one is specialty chemicals, which you spoke about, and third one is maybe QSR consumption, kind of a play. I think all these three sectors, though value has emerged, I think it is still better off to kind of wait and watch rather than getting into them at current valuations. I think there's still some pain left for them. Of course, IT is something that we are looking at, and we have started nibbling into IT slowly and steadily.
Fair point, Nishit. We'll let you go on that one. Thanks for stopping by today. Good chatting with you.
Yeah,
that
thanks.
was Nishit Shah of Phillip Capital PMS. Time for a break. More news and updates.